right, everybody. Welcome to a painful Thursday here. Um, we've seen the market trade in my calculation about almost 150 point range today. Um, Maybe even more than that. Let's see, S&P is now back down 1100. So, yeah, yeah. This is as I've been saying, not 1100, excuse me, 110, not 1100. 1100 would be a massive, massive problem for everybody. Hey there, John. Um, as I've been talking about all morning, guys, I'll start this off by saying this 1000% is not political. It is not political. We don't get political here. But the indecision, the indifference, the constant flipping of a coin of the news flow coming out of the White House is what is causing this market to trade the way it's trading right now. Not that that's, ultimately a bad thing for trading. This is not what the market wants. This is the ultimate bit of uncertainty. And when I say an ultimate bit of uncertainty, it's so different than like going through COVID. So going through COVID, right? That was an instance we were all on the same page. Nobody knew what was going on. There was a lot of uncertainty, but stocks were just going down for one specific reason. Now we get contradictory information multiple times a day. And that is the cause for this uncertainty. The bright side of this is the fact that the VIX is just not breaking out. Okay, just not breaking out. Maybe potentially that's a sign that that the market is bottoming. Now, if we do see the VIX jump out of that 25-ish resistance range, and maybe let me actually bring in a chart here. Might be easier for everybody to look at. All right, here is the chart, guys. And as we've talked about, this range here has been this resistance, other than, right here, which we had just had that massive, couple day spike that was back in August. Excuse me. So this really seems to be a comfortable area for the VIX. Now, if it pops through here, there's no resistance on, that will be, to me, potentially a sign of, capitulation. So that is definitely something for everyone to keep your eye on. But today's topic is one of my favorite terms that also happens to be one of my favorite ski runs here in Beaver Creek, and one of my favorite chairlifts, which is the Birds of Prey. We're going to talk about the iron condor. All right, we're going to talk about the iron condor today and why it is such an important strategy. When to use it, what's the upside, what's the downside. All right, can everybody hear and see me okay? I need 25 smashes. I need 25 likes before I move on here, guys. How many do we have, Mike? $13. I'm not moving on here, guys. I'm going to stay here silent. We're going to look at this beautiful bird of prey, the condor here. Excuse me. I know we harp on it every day. I know Charlie was, pounding on you every day, but you guys have no idea how much it affects our social media and our ability to kind of branch out. So that's why we really ask, really, really, really appreciate it. Ooh, Paul, boy, I don't want to drop the hammer, but that's a good idea. That is a really, really good idea. We might have to start putting that into our daily protocol here. All right, Mike, how many we have now? Steven, I just want to verify it. If it's 30, that's awesome. I just want to verify it. Okay, got it. Thank you, everybody. Thank you. Thank you. Okay, what is an iron condor? Those of you who are in my Opval room, we trade them. We have one on right now. Those of you that are not, you may have heard of it, may not understand it. But let me just first start saying, excuse me, God, it's the same cough. It's like 6 weeks, this cough and this throat clearing. I really apologize. The name of a strategy can be very intimidating. Okay, we've talked about this before. And someone that's maybe new, maybe a little bit inexperienced, even if you've been trading a long time and you've never kind of gone through other strategies, can be very intimidating. But when you break the names of these strategies down, for the most part, it comes down to just a combination of the basics. So here, in Iron Condor, okay, Iron Condor is a strategy that all we're doing is putting together a vertical call spread and a vertical put spread. That's it. That's it. Okay, so we're combining a bullish and a bearish spread on the same stock. Now, that may seem kind of counterintuitive. Why do I want a bullish spread and a bearish spread at the same time? Well, let's discuss the reasons why. 98% of the time, 98% of the time, as Doug said, we're going to put this on as a short iron condor, meaning we're going to take in a credit. Okay? And in that instance, what we do is we're selling both a call spread and a put spread. Okay? So we do that when vol is really expensive. We do that because we want to collect a really, really rich credit. And we do that with the hopes that a stock is going to remain fairly range bound. Okay? We don't want it to necessarily get to the short call. We don't want it to necessarily get to the short put. The flip side of that is, and I can honestly only remember maybe once or twice in my entire time of Prosper being on the long side of an iron condor. And that's where we're buying both a call spread and a put spread. And it's a debit. And there you want to have movement. Now, I'm going to bring in some real examples here, but this is what, if you can kind of visualize, this is what the P&L would look like on a short iron condor. Okay? And you can see, like I said, what we want is the stock to remain range bound in between those short strikes. Anywhere in between those short strikes. And that would be the maximum profit. That would be the ideal situation. Okay? Remember, if we are selling something, where do we always want? Actually, it doesn't even matter if we're selling something. Where do we always want a stock to go? We always want a stock to go to the short strike to max the position out. Well, in the case of an iron condor, we have two short strikes. one on the downside on the put side, one on the upside. So if we wanted to go here or here, this scribble up here that I'm making is ideal. Way to go, Reg. Okay, the optimal time to trade this is when vol is high, we get nice credits, and the charts are telling us that a stock is likely or maybe somewhat range bound. Okay, so the max profit bird's nest, I love that, Paul. The maximum profit on a short iron condor, we want all the options to expire worthless, and then we get to keep all the credit. So that would be anywhere, let me go back here, anywhere here between the short strikes. If we're between the short strikes on a put spread that we've sold and a call spread that we have sold, all the options are worthless. And that is maximum profit. Now, just like every other position that we put on out here, we know our risk. Okay, our risk is capped. We always trade like that. And so the max risk on a short condor is if you blow past all of the strikes, because that means either the put spread that we sold has maxed out or the call spread that we have sold has maxed out. Okay, so the max risk would be the width of either one of those spreads. Let's just call it selling a $5 put spread, seeing a $5 call spread. Okay, less the credit we receive. So let's say we receive a $2.50. Excuse me. And either one of the spreads we've sold max out at 5. Okay, it's worth 5. We collected $2.50. Our max risk is $2.50. That's what allows us to appropriately size the position when we go into it. Okay, now the break even on a short iron condor. Let's think about the upside first. If we get to the short call, that's a great thing if it stops there. If it starts to move higher than the short call, okay, that starts to get into this area here. And then that loss, potential loss, is capped out because we have a spread. Same thing on the downside. Or excuse me, let me go back to the call. So the break even on the upside here would be the short strike plus whatever credit we received. And I'll go through the real example of our XOP iron condor that we have here in a moment. On the downside, if we get to the short put at expiration, great, that's perfect. What if it blows through there? What if it, keeps on going? Well, at that point, the break even would be the short put, okay, less any credit we received. That would be our break even on the downside. Okay, now the iron condor, more often than not, we do them with equal distance call spreads and put spreads. So it is really a neutral spread. Same risk on the upside as there is on the downside. However, there's a lot of flexibility with an iron condor because you can still put on the same position using the same backdrop, meaning if vol is high, option premium is expensive, you want to sell both sides, great, but you can adjust the strikes on either side to create a position that has a positive delta bias or a negative delta bias. And that's kind of what we did in the XOP, which I'm going to show you here in a moment. Now, not going to spend a lot of time on the long iron condor because, like I said, I think in the history of Prosper, we've done that twice, okay? But this would be the exact opposite of the short iron condor. Okay, short iron condor, the profit is way up here. Okay, if the stock doesn't move, in the case of a long iron condor, which means we are then buying both the call spread and the put spread, we want either one of those spreads to max out. So we need the stock to move. Okay, we need the stock to move there. So that's the long iron condor. The max profit on a long iron condor, anywhere if we get to the short strikes or beyond. Okay, if we get to the short put, that means the put spread is maxed out. Boom. If we get to the short call, that means the call spread is maxed out. Boom. That would be our max profit area. The max risk on a long iron condor is the same as typically any other debit spread that we would put out there, and that would be what we pay for the spread. Okay, and that would happen if the stock at expiration remains anywhere between the two long strikes. So again, on the short side, we want all options to expire worthless. On the long side, though, we don't want that to happen. And then the break even, okay, and that should say, boy, I messed up. This is on me. Can't even blame this on anybody else except me. I am very disappointed in myself. Man, oh man, that's gonna ruin my day. The break even on a long iron condor, everybody. Okay, on the call side, it would be whatever the long call strike is plus the debit paid. And then on the downside, on the put side, it's the long put less the debit paid. Again, just like on a short iron condor, you do have the flexibility to adjust those strikes. Okay, now before we go into XOP here we go. Here we go. Yeah, Stephen, we're gonna get some free goodies today. And I was thinking of a word of the day and thinking of something related to the strategy, thinking of something related to a condor. And all I could think about, honestly, what kept coming to my mind is what a cluster, the market is in right now because of this news flow. So figured, what the heck? We'll go with cluster for the day today. Mike, how many smashes are we up to right now? 50. Oh, good. That was going to be my point. Good. By the way, just complete aside, has anybody out here ever skied in Beaver Creek? If you have, you're going to be my favorite. You're going to go right to the top of the list here. If you haven't, that's okay. I still like you. But if you have skied in Beaver Creek before, okay. So those of you that have skied in Beaver Creek, you are going to understand my reference to birds of prey. There's actually something, Gerald Ford's house is right along the Strawberry Park lift, and there is a name of a ski run that runs right along his house called President Ford's. It's a nice black run. There is something here in Beaver Creek called the Talons Challenge, Talons of the birds of prey. And what you have to do is you have to ski the 13 hardest runs, which are all double blacks, in one day. And every single one of those runs is named after a birds of prey. Goshawk, peregrine, screech owl, so on and so forth. It is quite the challenge. It is quite the challenge. Anyway, I had to throw in an aside there. Kent, it's actually really fun. I've done it 3 times when I was a bit younger. I am a much, much better skier now than I was when I did it, but I just don't know if my body could deal with it anymore. Because it is the 13 hardest runs, and depending on the conditions, you may have, really, really deep bumps. You may have tons of powder, but it's great. Zora, the knees are great. The knees are great right now. So anyway, back to our XOP. You know what, Vincent? I may use that tomorrow. I may use bumps tomorrow for our word of the day. Okay, this is our short iron condor in XOP. Wolf Creek is awesome, Mark. This is our short iron condor in XOP. Now, without looking at any of the numbers, without even looking at what the position is, if you were to imagine drawing a P&L here, just based on the colors I have here, this would come out to something like that. Okay, where you're maxing out this profit up here, which coincides with this area right here. And if we move too far in either direction, we have our max loss, but we know what that max risk is. It is completely capped out. Okay, now, raise your hand, give me a yes. How many of you are in this position? How many of you are in this position right now? Not sure where Pine Mountain is. Is that in Colorado or is that somewhere else? I know where Pine Valley is from my days of watching all my children back when I was in college. Okay. Well, you don't have to trust me on what I drew out here. Okay. So Iron Mountain, Michigan. Got it. Okay. Thank you. You don't have to trust me for what I drew out here. So I'm going to bring in our real live. This is current up to the moment here. This is what the risk chart looks like in our position in XOP. Okay, so our position in XOP, we sold on the downside the 121, 118 put spread. We sold on the upside the 126, 129 call spread. Okay, now when we did this, guys, again, normally when we would put out an iron condor, we're looking pretty much at the same distance away from where we are at the money so that it is a real neutral trade. Okay. However, in this case here, we did this with a bullish bias. A bullish bias. How is this a bullish bias, guys? Where would, if this was a bullish trade, even though we're selling both a put spread on the downside, call spread on the upside, okay, where would this stock, this is next week's expiration, Paul, March 14th. Where would the stock had to have been to give us positive delta? Anybody? Okay, if this was a positive delta trade, meaning a little bit of a bias to the upside, okay, this is good. I love these different answers here. It gives us something to talk about. We got 126, 124, 126. Okay, let's talk about 126 first, since there's a couple answers there. Okay, if the stock was 126 when we put this position on, okay, which of the spreads would have a higher delta? Okay, if the stock was 126, which of the spreads, the put spread or the call spread, would have a higher delta? Still got a lot of clusters coming in here. I love it. I love it. Okay, yes, exactly right. Gilbert, Doug, everybody else. If the stock was Steven, nice job, Kent. If the stock was 126, then the call side would have a much higher delta, which would give us a larger negative delta on the calls than what the positive delta would be on the puts, right? Because if these were, pretty far out of the money puts, there wouldn't be a lot of positive delta to selling that spread. But there's going to be a lot of negative delta to selling this call spread. So if the stock were 126, this would actually be a very negative delta or bearish biased iron condor. Does that make sense? That would give us a lot of negative delta. Okay, does that make sense? Remember, the neutral delta, to have this as a delta neutral trade, would mean that the strikes, the short strikes, would be pretty equidistant away from where the stock was trading. Meaning, if we just kind of looked right at the middle here between these short strikes, we'd be at 123.50. That would have given us a neutral or pretty close to zero delta when we put it on. But we didn't put it on there. We did this with an intentional bullish bias or positive delta bias. So that means what? That means what? That means that we were, think of it this way. If we had an intentional positive bias, we were less concerned about the stock going down than going up, right? Right? We weren't really worried about selling the put spread on the downside, or I would say less worried about selling the downside put spread than selling the upside call spread. So what that would tell me is it would have to be somewhere biased on this side, where the sale on the put spread would have a higher positive delta than the sale on the call spread, which would have a smaller negative delta. Does that make sense to everybody? Again, think of it this way. If I'm selling kind of an at the money put spread, which is pretty much what we did here, is actually slightly in the money. Okay. What would we be looking for? If we just sold that, don't even think about the call side right now. If we just sold an at the money put spread, what would we be looking for? Or what reason, what intent would we have for doing that? That would be hopeful that the stock would just kind of remain or go higher. Exactly right. And at that point, selling a further away call spread because we want the stock to move, just not incredibly a ton. Does that make sense, everybody? So, lastly, what I want to show everybody is back to our chart here. Okay. The blue here is our break even at expiration. Okay. The blue, exactly, James. Selling a put or selling a put spread means we don't want stock to go lower. It can stay where it's at, preferably move higher, but we just don't want it to go lower. Good. So the blue here is our break even. Let's go back to the chart here for a second. Okay, and I'm going to put up the actual strikes. This was the 121, 118 that we sold, and the 126, 129 that we sold. Now, the credit that we received was $1.85. Hefty credit. So what that means to figure out that break even is even if the stock went below 121, which is our short strike, we could still make money. It's not going to be our max profit, which is our 185, but if we take 121 less what we collected, we are protected all the way down to 119.15 at expiration. That would be our break even to the downside, because at that point right there, the put spread would be worth $1.85. The call spread would be worthless. So it's $1.85. That's what we collected. It's a wash. Does that make sense to everyone? Okay. Now, let's look at the same on the call side. Okay. Our short call is the 126. If it goes above 126, if we take our 126 and add in our credit received, that brings us to a break even of 127.85. So we've got 119.15, 127.85. And lo and behold, exactly what our P&L spreadsheet shows. Okay? Everybody good with this? Now, what I want to show you here, we have a ton of information on our campus about all different strategies, but we have a ton out there for iron condors as well. So, Mike, if you can put this link up there, please. This will take you to a video. It's about a 30-minute video. Thank you very much. That I did explaining iron condors. Okay, whether you bookmark it, you watch the video, throw it away, watch it later. That will be a very nice, helpful guide to breaking down a trade. Okay? Everyone, thank you. I know we went a little long today, but that's okay. I don't mind it when we're on such a... That is on our YouTube channel. Yes, William. That is. I don't mind, when we're in a great conversation and we're going on, we're going on, we're going on here. Never want to cut anything short. So, all right, let me get our wheel. All right. Yesterday's winner, let me go back and look here. When Charlie was on, Mark Diggs. Mark, if your name comes up today, that's great, but I'm sorry, we're going to spin again. Here we go, everybody. Today's Iron Condor winner is, it's a close one, Elisa Rader. That is definitely a new winner. Definitely a new winner. Elisa, are you here? Are you here? Awesome. Awesome. Winner, winner, chicken dinner. Okay, shoot me an email, Lisa. Right there, prosperswag@prospertrading.com. Shoot me an email with your mailing address and your size swag, and we will get something out to you. All right, everybody. Thank you. Thank you. Thank you. Again, we have so much education out there, guys. I know everyone likes to, Google and go to the internet, YouTube, blah, 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 blah. We have so much information on our YouTube channel, videos, on our campus. Take advantage of it. Take advantage of it. All right, everyone. Have a wonderful rest of the day. Hoping the market comes back. It's trending in the wrong direction right now, but hoping the market comes back a bit. And we will see everybody tomorrow. Have a great one.